Hey everybody, Benny the Finance Dog here. Welcome to my channel. I hope you had a great week while I was gone, and I'm super excited to be back making content for us on my channel. I say us because this is as much for me as it is for you. We had a crazy week in the markets, even though the markets were closed on Monday, and today I'm here to talk to you about a mistake I made recently. I also want to talk about how I bounced back from that mistake and the importance of risk management and following your rules. On Thursday, I was super excited to be back in front of my trading screen after a week away, and in my excitement, went against all my trading rules and practiced poor risk management. I ended up taking a large loss. Let's review the charts to go over Thursday's trade. As always, this first chart is the daily candles that I saw on Thursday morning. As we can see, Apple had 2 days where it appeared sellers were in control and a ceiling or resistance level had been reached. This indicated to me that a downside bias was appropriate. Moving to the 4 and 1 hour charts, we can see that pre-market hypothesis was validated. Apple appeared to be trading lower, rejecting the level of 178, but also had found a floor at 177 that I should have probably paid more attention to. Between open and 7 a.m., I purchased 6 contracts of the June 2nd expiration 175 puts for an average of $35 per contract. This broke 2 of my rules in that I averaged down over the course of the 30 minutes between open and 7 a.m. Not once, but twice as the trade moved against me. Instead of cutting my losses, I ended up multiplying them because I had bought more contracts of a losing trade instead of admitting that I should have just taken the loss. Also broke a rule by not setting a stop loss so that it would automatically get me out, and in so ended up buying more contracts because I was sure my bias from the pre-market was correct. I held and held and held, hoping and wishing that the bull run would reverse and my contracts would stop losing value instead of just admitting I was wrong and cutting my losses. I practiced poor risk management all day and ended up logging in a loss of $206 or nearly 99.9% as I was able to sell each of the 6 contracts for $1 each at the open of the following trading day. I broke plenty of rules and took a big loss on this trade, so the next day I entered 2 more trades so that I could give myself an opportunity to practice my rules. This time I followed my rules and mitigated my risk. I made a small gain on both of these trades, but I was happy that I had followed my rules. I set a stop loss at break and moved it up to break even as the trade moved in my favor, and as the trade moved against me, instead of moving my stop loss, I just allowed myself to exit the trade for meager gains of $1 and $5 respectively, instead of taking a loss that could have been larger, as the moves of the day did continue to move against the trade that I made. I want to share this story with you today because I think it's important to learn from our mistakes. I also think it's important to be transparent when I make a mistake so that I can get better and you know that I'm not just some super trader. I made a big mistake and I was able to learn from it and make better decisions the following day. So, a couple of things I learned from this is always follow your trading rules. No matter how tempting it is to break them, it's never worth it. Don't be afraid to admit you are wrong about a trade and take your loss. Take small losses instead of hoping for them to turn in your favor. It's better to take a small loss than to risk a large loss. I hope this story helps you learn from my mistakes, and I hope you always remember to follow your own trading rules and practice good risk management. Thanks for watching. Please like and subscribe for more content. Woof woof.